If you feel like the investment playbook that worked for the last 10 years has just been thrown out the window, well, you're not wrong. The rules have totally changed. Today, we're diving into the new game plan for a world of high interest rates, constant surprises, and, of course, the unstoppable rise of AI.
I mean, just look at this. The 2010s were pretty straightforward, right? Interest rates were basically zero. Money was easy to come by, and that fueled a massive bull market in, well, almost everything. But today, it's the complete opposite. We've got stubbornly high rates, we're getting hit with geopolitical and economic shocks left and right, and AI is changing everything at lightning speed. The old way of doing things just isn't going to cut it anymore.
So, with that said, welcome to everything you need to know about finance. Now, before we get any deeper, just a quick heads up. This is a deep dive, an exploration of how to think about the market. It is not financial advice. We're here to understand this new world together. And hey, if you find this kind of stuff valuable, a quick like and subscribe would be amazing. It really helps.
Okay, first things first, we absolutely have to understand why the old rules are broken. Seriously, getting this part right is the most critical first step for any investor trying to navigate the market today.
This right here is the new reality. Higher interest rates aren't just a number. They mean money has a cost again, and that changes the entire formula for how we value companies. Inflation is always lurking in the background, and everything just feels faster, The cycles are quicker. And then you throw AI on top of all that, which is this incredible dual-edged sword. It's creating massive growth, for sure, but it's also causing massive disruption.
So what's the big takeaway here? It's actually pretty simple. Discipline now beats speculation. The days of easy money and just throwing a dart at the board are over. Success now is going to require a much more thoughtful, disciplined approach. All right, let's talk about the biggest theme out there, the one everyone is focused on, the AI revolution. It's a gigantic opportunity, no doubt, but it is also a minefield of hype. The real challenge is figuring out how to separate one from the other.
This is the mindset shift you have to make. AI is not a meme trade. It's not a fleeting trend. This is a full-blown productivity revolution on the scale of the internet or even electricity. That means we have to look past the buzz and focus on the real-world business fundamentals.
And this slide really breaks down the two sides of that coin. On one side, you have the winners. These are the enablers, the companies building the actual infrastructure, the guts of AI, like chips, cloud platforms, and even the energy needed to power it all. And this is key. It's also the established, profitable companies that are smartly using AI to get better. On the other side, that's the danger zone. Companies that just slap AI in their name but have no real product, and all those super hyped stocks that are priced for a future that may never arrive. So it all boils down to this one simple but powerful rule. Invest in AI adoption, not AI buzzwords. You want to find the companies that are actually using AI to make more money and better products, not the ones that are just talking about it. Okay, next up, let's dig into that other huge force at play, the high rate reality. Because make no mistake, higher interest rates aren't some minor tweak. They fundamentally rewrite the rules of how we value businesses. This table lays it out so clearly. When money isn't cheap anymore, what works? Profitable companies, businesses that generate tons of cash, have low debt, and can raise their prices. Strong, sturdy businesses. And what struggles? All the speculative stuff. Companies with big dreams but no earnings, and businesses that are drowning in debt. Their whole model was based on cheap money, and that party is over.
The takeaway here is crystal clear. This new environment rewards two things above all else: quality and patience. It's really a return to the classic fundamentals of investing.
So, we've broken down the new environment. We get it. Now let's get into the practical stuff, the strategy. How do you actually build a portfolio that can handle a world where volatility is just the new normal?
Here's a simple three-step playbook. First, diversify. Don't put all your eggs in one basket. Spread your investments out. Second, stagger your buys. Don't try to be a hero and time the market perfectly. Just invest steadily over time. It's a strategy called dollar cost averaging, and it works. And third, and this is so important, always keep some cash on the side. That's your dry powder, ready to deploy when everyone else is panicking and great opportunities pop up.
And here's just one example of what that could look like visually. Again, this is just a framework, not a prescription for you. But you can see the logic. A solid core, a dedicated slice for AI and innovation, some defensive stuff to smooth out the ride, and of course, that 10% cash position giving you that crucial flexibility. This leads to a mindset that can totally change the game for you. For most people, volatility is scary. It's a threat. But if you're prepared,
If you have that dry powder, volatility isn't a threat. It's an opportunity. It's a sale.
Which brings us to our final section, the winning mindset. Because look, having a great strategy is one thing, but it's useless if you don't have the discipline to actually stick with it when things get crazy.
So let's start with what not to do. These are the classic traps. Chasing stocks after they've already skyrocketed, freaking out over every single news headline, totally ignoring what a company is actually worth, and maybe the two biggest sins of all, going all in on one single idea and panic selling the moment the market drops.
And now let's flip it. Here's the winning strategy. It's about thinking in terms of years, not days. It's about buying great businesses, not just exciting stories. It's about using those scary downturns as a chance to buy more of those great businesses. And it's about always respecting risk.
And this right here might be the most important concept we've talked about. The age of AI doesn't get rid of market cycles, it accelerates them. Think about it. Information moves at the speed of light. That means market booms and busts are likely to happen faster and be even more intense than before.
So, looking ahead, the people who are going to win at this are the ones who can do three things at once: have exposure to all this amazing new technology, maintain a strict discipline around valuation, and, crucially, have the emotional control to not get shaken out of their strategy.
And that really leaves us with the final question, the one you have to ask yourself. In a world that's only going to get faster, how are you going to prepare and adapt your strategy to not just survive, but to thrive? I really hope this explainer gave you a clear and valuable framework for thinking about this new investment landscape. If you enjoyed this deep dive, we've got plenty more where this came from, so be sure to check out our latest episodes. Thanks so much for watching.